Unusual activity found in TKO. If you go all the way out to your May expiration, that's 45 days out. The 165 calls had around 2,000 of those contracts traded in there today, while your volume everywhere else was literally zero. So you had a lot of open interest on the call side for things, but the volume was zero. The 165s, they had all the volume at 2,000. So that is something to be aware of. And even if you go all the way out to July, the 160s had all the volume in there. So about 1,000 of those contracts got traded. And if you go to your 417 expiration, your volume was about 200 on those 165s. And then on the 160 puts, you had right around 200 as well. So not a lot of volume anywhere else but on those long dated 165s and those 160s. But the May 165s is interesting to us because there's literally volume zero everywhere else, zilch, nada. And then with the 165s, you had 2,000 of those contracts traded in here today. So we're currently at 152.99. This weekly candle here is still above this 9-day EMA, but we want to see this breach this 153.89 area. That's going to be that 23.6 fib level. That's going to be key for us if we can confirm a hold of this by the end of this week. So if we close green up above here, that 153.89, then it looks like we're going to be bullish, and that's going to be our new support. And then we can work our way up to those 165s, hopefully. If not, if we're below that number, then the 9-day EMA may save us, but probably not. It's going to have to take a visit back down here to this lower trend line here. That's going to be right around that 146 area. So the numbers we're looking at in here, 146, 153.89, and above that, we're just going to say 165 because that's where all your volume is on your options chain. Overall volume weekly is dropping off. Obviously, we haven't put in a full week in here yet, so that's why your volume's so low compared to last week. But you had some indecision in here with that quick high low that we had in here with that long upper wick. So your volume is going to be closer to this candle here for this week, no matter what it does, unless we get a nice little pop in here and everybody starts loading up on those calls, I guess. But really overall, IV in here is relatively juiced compared to itself. So the options prices are pretty high compared to itself in here. That is even with zero volume. So those 165s that everybody's paying for 2,000, that is a pretty overpriced option, but that means you might get the volatility in there. That's just what everybody's pricing in. The options traders are pricing in this underlying asset there. So that's why your options are a little bit juiced in here. So speaking about pricing in expected moves, you got about $10 by April 17th. You go out to May, right around $16 expected move. If you go all the way out to July, that's going to be a $25 expected move. So $16 move, well within that 165 or that 165 strike that everybody was buying in May, well within that expected move by that same expiration cycle in there. So it's going to be right up and around here. So we should be able to climb back up in there soon. It just depends on if we have to go down here and bounce off this trend line first, or are we going to confirm it here and then get a nice little pop into the next monthly expiration. It's going to be kind of weird to see in here, but again, there's no volume. Your spreads are pretty wide unless you're trying to base this off of a long dated call, a leap, 45 days out, and you're just purchasing a call or you're selling something against your shares, whatever. That's how you would play this. Other than that, it's kind of sit back and wait and see what the volume does and see if this 153.89 holds first before we actually do anything drastic in TKO. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.